Hello, everybody. I'm gonna run down a few more setups that I took in the week that ended. A good one that I was spotting for quite a few days was Australian USD, and let me just show you. It was done on the 21st of July, and get down to Australian dollar. Yeah. Well, the idea was that the pair points to decent opportunities to set shorts up from 74.50ish level for a healthy risk to reward ratio. And I was basically looking towards 7200 handle, and it was based on the prime 8 hours layout. So the post is already there. I'm just going to go and discuss the chart. This is a chart in motion. Basically, what I was looking for is this zone that was shown in that it's a breakout. Price went under, found a supporting trend line, got a bounces here, bounce back here. It keeps on failing towards this trend line. So twice already done it. So keep getting a bounce here. So it was apparent that it's likely to come and strike down towards this T2 trend line. But if you can see here, is coming at 74.49. 0.60. Regardless of that, uh, for even sake, always say 74.50 plus minus again, 5-10 pips. So I was looking in probably, to get a better entry, and I had a channel, in proportion to this T2 trend line, which was coming into T1, and the emphasis was that, again, it's a breakout trend line broken, retested, got a high, and then apparently the price is falling back. It needs to eventually fall back towards this trend line, and as we can see, it's declining. So out here it says 7201, but right now it's probably around 7170, and if it takes next 2 or 3 days more, then probably about 7130, 7140, or whatever the number is. Basically, regardless of the figures or regardless of the level, the trend line here is double the target. So going back on the live chart, and the same chart, I just added two trend lines to it. That's let's not bother with that right now. So this was where the price was when I was looking for another attempt back towards here. And if I do a cross section, apparently the high came in at 74.49, and if you see T2, it was 74.49 and a change. So basically, this is where the shorts were triggered, and they went in beautifully. Was looking for a close underneath this trend line, which was a supporting base where it was getting a bounce again and again. So apparently it did, and it hit a marker here. Now this is just the main trend line, just to give you a bigger picture. That's I've added this trend line because I think that this apparently is the next target, and it's somewhere around close to 72. 55, 72.19. So I would say 72.15, 72.20 is is still doable. But why we stalled around to this low? Just go and do it 2 hours. I had a layout here, you know, apart from apart from main layout on a time frame like in the previous chart that was in 8 hours. You got small time frame where you can do a little bit more charting, and just to get more confirmation again. Coming down from 74.50 zone, I was required a break underneath here, which came in, and then I have a supporting trend line on 2 hours, which came in and played out, and we ended up taking some profits out to here. Probably going looking for a swing back to 73.20 zone, probably somewhere until here 72, 73.20, 73.40. and we start seeing a holding pattern out there, we can opt for sell back again and go for a target based on 8 hours, which is 72.15, 72.20. Eventually more fall and 71.70 or 7, whatever the level is that's coming up on the 8 hours, because the whole concept is that we are using this just to make it easy. If I go for a channel play, you know, the pattern, it being a bear channel between this black and this black, we've taken out a substantial support that was holding to close under. We hit back here. So this was coming about 72.01 by the time I charted it. Right now it's 71.72, and let's say if it takes 3-4 days, I would say somewhere around 71.40ish level. That would be next prime target. So again, the whole concept is trend line analysis, how you can use it to your benefit, and it's all about patience. It's all about waiting in. Either you buying here or you selling here, or if it breaks out, then of course you let it go. You wait for a bounce, retest here, and then going for a buy. Coming out of the bear channel between T1 and T2, this will become a buy. This will become bullish, and your target could be somewhere around 75, 50, 75, 60. I mean, that's another story. Just discussing the chart layout that I've done and some of the reasoning behind it, and how you can use other time frames to go and work along with that. And I think this is relevant. Again, what I'm using here is this trend line T1 and this trend line T2 has a channel. I'm ignoring this spikes up, and almost 2 weeks of trading, 2 to 3 weeks of trading on the higher side. Totally ignore it, because I'm more interested in channels. This being a bear channel, price did not linger too far off and fell back in again. So, briefly try to attempt it, but got a close by blub and found the base, got a little bit of bounce, and we got a day close underneath. Similarly, I have something on the weekly. Got another bear channel on the weekly, and this is suggesting even further lows towards almost towards 7.7000 handle. Given the fact that commodity prices are falling, RBA is pretty dovish, and there could be a higher chance that actually we go and we strike those levels down here. Maybe not this week, close to FOMC. It's a higher probability, so you can look, and as of right now, I think any swing high on the Aussie would be a good point to go and sell into rallies, unless until otherwise. I think a couple of closes above 73.40, 73.50 would probably change their view. But till that is happening, stay with the trend, which is on the lower side, and at least get a strike down here, or at least use the 8-hour candle and see how far it can drop. And since the level on the bear channel that we are looking at on the 8 hours, this one, the target zone is declining, so the target is basically increasing after every 8-hour close. Another setup that was done on 24th of actually on Friday. So yeah, I was looking at, okay, I'm not going to discuss this because this did not trigger in. Pound Canadian. I had two scenarios on that, and you're more than welcome to go and read on that. I'm just going to discuss the scenario where I had a buy situation coming in. This was a 4 hours chart that the main buy would come down much lower, but my second scenario was an 8 hours chart, and it basically called in for briefly put in resistance, not really tested, on a higher, you know, really did not get a good test, or we did not see too much swings from here. Apparently, just broke up, got a retest on Thursday towards 2.0160 and got a buy, and actually here, and then getting a retest again to the same trend line, which was coming down to about 2.016065. So idea was that if it breaks here, then use the 4-hour chart and go for a major target towards T3, which is coming to about 2.0041, and cash out and go for buys for a retest towards T4 or 2.03, whatever the level that was coming in. And if not, if this is holding, this 8 hour layout suggests we have found the earlier briefly put in risk. This is just a briefly put in risk. Just you got a resistance and immediate break, so not too much testing. So put in risk black trend line roughly in 2.0160 as a possible support, and while upon next test. The whole idea is that we get a next test out here, and if it fails to break underneath, then we can buy, and we can sorry buy here we can look to long for the test of the 4 hours listed resistance. So I'm basically combining 8 hours. This is an 8-hour time frame with the next one. I'm going to show a 4 hours time frame. I'm combining both the charts, picking a position based on 8 hours and exiting and trying to go in short based on the 4 hours, which is this chart here. And T4 was coming to about 2.0305. So right into picking into 2.03 handle was to cash out and go short. This was the main setup to go short. And if I pull my charts up on pound CAD, here, so this is the same 8 hours. I've just added this trend line to it. What happened was that it's the same trend line. It got a test here. T2, which was coming at 2.0165. The listed low came in 2.0162, and then we got a bounce. It held and went for a bounce, and it did a high of 2.0315. So I had about till 10. So plus minus 5-10 pip does not matter. And how it was looking on the 4 hours, same chart, no change. I was just looking at that. This is where the price is making swings. That's been staying underneath, going short, staying higher than that, going long, and being going on the higher side, was able to post a newer high. So ideally you should do the same thing, post a new low to this, or get a break higher and then get for a buy again. So T4, since when I was doing the chart, I was more inclined towards somewhere in the European session that the high might come in. It eventually came in a bit late, so 2.0305 has in T4 on the information bar became 0.54 here and 10 here. So apparently it's increasing after every 4.5 pips every 4 hours. So we have to adjust our entries based on time it's taking, because inclining resistance, of course, every next candle would be a little bit inclined up. Declining support, of course, every next candle would be a little bit on the lower side, and so on. So again, the whole concept is that Simple trend lines, nothing fancy. Uh, True, it makes more, people who does not know how to work on trend lines, might not get it easily, but the concept is the same thing. These lines just tells you basically above buy, below sell. A little bit of experience required, a little bit of watching the chart movements based on this trend line, how the price reacts and how the price goes around. With that, of course, that's your experience bounded towards whatever the time period that you have spent and conducted your training and what you see in the market. It's a cycle of repetition, as in history repeats itself, and rinse, repeat, carry on the same way. And another factor where I was looking more in terms of it getting probably sell out is that, considering this candle close spike for almost made it, in this engulfing also at the same time, gives you a lot of hint that, the flow of direction is probably, switching, or at least, it wants to go in some kind of relief here, so kill the overbought situation. And it's too early to suggest, but if I take this as a head, this as a left shoulder, this probably as a right shoulder, maybe another one coming down here, holding and break, then this won't be the neckline here, but this probably would be neckline, which is pretty much close to, by the time it comes in, might just be the level for the 4 hours support zone. Anyways, this is an interesting trade for us, and I'm looking into it to carry forward, or be trading in the coming week. It's a pretty interesting pair. Now, enough of the winning trade. In the last 8-9 days of us been suggesting our live calls. Uh, this is one trade that came in, stopping us out. This is euro odd, and the whole concept out here is that, I'll just brief that out. It was done on, which date was that? 22nd of July. So you're more than welcome to go and read what's been done out there. The whole concept was that I'll pull the chart up. Is that the price is stuck between these two zones, and we were trying last 4 or 5 days to see come down towards this black trend line and go for a buy for at least a test of this trend line out here. So the assumption was that let it break, we sell, hit down here, we buy, we take it back out here. So when we come across some kind of these kind of channels where this is one breakout trend line and this is getting down and supporting trend line, more in terms of an X, we consider it as more in terms of consolidation. The price would consolidate, hit here, sell, hit here, buy until it breaks either above higher to here or lower to here. So the whole idea was that this was coming to about T5. Let me just pull the charts up on that. This is how it looks now. This is how it was looking back then. So 22nd July. This was the break, right? Yeah, 26th July, early in the morning. I think there was a news that was coming in from either. There was an RBA news. There was a news. I remember. There was a news. I can't remember which one was it. Apparently, the level T5 was 47.68. So let's say a break of 47.68 means I would have gone in by 4 or 5 pips on the higher side, 70.72, and looking for this target. Basically, I was on the buyer side on this break, so it broke, but not before it spiked lower also at the same time. And this is where we got out, because our average stop loss is, let's say, about 33 pips, 35 pips. And basically just took us out. Had we had a 40 pips or 45 pips stop loss, we would still would have been in the trade. But unfortunately, we were cut out. It hit about 50, 55 pips, or towards the gain side before again lowering up and then getting it close on the higher side, and then Aussie dropping substantially, and this actually going on the higher side, which actually makes sense because I've done a weekly on this a few days back and pointed out that this is more on the weekly looking like as a bull flag. So it's more bullish. It was more. There was a reason if you go and look on the post again uh, over the site, we were trying to go in for a buy 3 4 days from here, but looking in touch here, sorry, test here to T2, and then go in for a buy and see if the weekly chart pattern can play out. Sometimes when the prices are choppy, the the pattern gives you an impression of what to do, what to look for, so you can start positioning yourself on those aspects, on those, or in those lines. We had a quite a lot of wonderful trade that happened last week, pound on euro USD, and there were a lot of other setups that we were, you know, trying to catch in, and they were actually moving in the intended direction. Unfortunately, the levels that we were looking in to get into those trades, they did not trigger. But that's beside the point. The whole concept again is that safety is first, regardless of what we see or how we feel. We show our patience by waiting for the price to come down to our intended comfort zone, and we try not to bulge in or give in and show our desperation. And you know give you an example. Looking for a Euro Japanese, this was again I think done on Friday. We needed a retest back to this breakout zone to enter long and head down for this target around here. So hoping Monday, Tuesday, if we won't see any spikes, or gaps opening, then maybe in the European session, if we come down testing somewhere close to probably 135.10, something like that. Whatever the level that comes in, basically, it's a read, it's declining, so every 4 hour it'll be coming lower. And see a test starts holding. Need to get buy in. First target would be a newer higher to this, probably about 136.50, and then look for continuation towards this end. So I hope this explains to an extent about trendline analysis and how it is done, the concept behind that, uh, the feeling, the comfort that it provides if you've done it correctly. I know for an extent my trendline analysis is quite unorthodox because I do not follow textbook literature. But apart from that, or regardless of that, my whole analysis is based on how I see price movement or price action, how I have been seeing it past 10, 12 years, and how I've been able to decipher or dissect the price action in my own way, using manual trendline plotting, using naked charts. The only way I can be effective in this market is if I stay patient and I wait for the price to come down to my comfort zone. And I want to emphasize on comfort zone, something like this or what you see in the earlier videos. From where my stop can be, minimum, that's what my comfort zone is. I'm looking it to go 138. I buy 136.50, or I buy 135.84. Price starts declining here, pumps back up a little bit. Again, who gets a retest here, not breaking and closing under. At the same time, it's getting stuck out here. So why bear the pain? Why let go of some potential profits of 50, 60, 70, or whatever the pips that is coming in, why not simply wait or give it a day or two till it comes in? And if it comes in, then then go according to what you have planned. If it just carries on from here, too bad, it's gone, no worries. There's so many other setups all over the place you can pick from. You know, there's always another one that's coming up. I can show you so many of them already listed out. Again, Euro, Canadian was a sellout from this zone, decent drop. So S&P was layout, get it close underneath this, start selling it, and it's been doing good. Waiting on uh, this is another one on Euro Pound. You gotta buy a signal here. I haven't posted this out, but then again, I do a lot of charting. At the moment it got, you know, closed above this trend line, it was a buy and probably should continue towards here. It gives you an impression the pound could be on a defensive more, especially if Euro pound closes above 71.25, 71.30. I expect it. I expect it to come down towards 7,200. So coming week, as of right now, my fair guess is that pound will be under pressure as compared to euro, or euro would enjoy better bids as compared to pound. Uh, some This is Canadian dollar again. That was on my radar, you know, but there's almost cannot go and post each and everything because I need to keep a check on the quality also, posting 4 or 5 setups, and I need to pick the best that needs to come, that probably would come. And like instead of Canadian trading Canadian, I opted for pound Canadian. So there are so many of the setups. I mean, uh, this is another one that I'm waiting for. Need a test of here, so probably by the time it comes in, maybe 123.10. 123 level and then going for a buy. I'm looking in a retest for this T2, so there's plenty of that to come in. Of course, need a test, hold, bounce. There's so many. Pound odd was a very good, decent setup. We caught up last week. This is a dollar chart. I think can get another high print out here, and unless it breaks out of this channel, then I think there could be some decent retraces coming up on the dollar. So can use that swing because by the time we'll start coming close to FOMC, and then I would expect some going back on the dollar. So these are just some of my views, but apparently what I do is that I mostly keep them to myself. Or wait for the European session to come in because that's where it gives you the best idea on what trade setup you need to enter. Most of the people, they think, at least institutional wise, that intraday trading setups is not something where you can make money or you can make consistent gains. But I believe if you do it correctly, if you've got enough reasoning behind your trade and you have got enough experience backing you up, you have the ability, or you can gain an ability where you can go and start pinpointing on prime setups and show patience and wait for the price to come in and see then how it goes around. And if done correctly, you're more likely to get one after another. I mean, there will be the one that goes and hits you off, but on the longer run, you'll be a very happy camper. And that's what I believe, and that's exactly what I do. So thank you for watching the video. And until next time, take care.